What's up, everyone? How's it going? Welcome back to Jayconomics. I am Jay. Thank you for joining me today. And today with me, I have Mariusz Skonieczny, who is a financial YouTuber like myself. He has a channel which I will link in the description below. We have a couple mutual investments, meaning that we are both invested in a couple stocks together, and that's how we met. And yeah, today Mariusz is on because we're just gonna have a nice conversation about the state of the market. We're gonna talk a little bit about Voxtur, Voxtur Analytics, and we are also going to cover what we look for in early stage investments. And I want to get Mariusz's thoughts on building a community and his MCE community. So Mariusz, thank you so much for joining me today, and welcome to the show.
Yeah, thanks for having me. Definitely lots of interesting things to talk about. Lots of craziness, lots of pain. So let's go.
Yeah, I know what they say, no pain, no gain, right? So,
Yeah.
It is what it is. So, yeah, let's start off talking about this recent sell-off and how this past year, really, I mean, it's been about a year that growth stocks have dropped, but obviously the past couple of months have been worse than the rest. So, in your eyes, what does this sell-off mean, and why is it happening?
It's not just the last 2 months or 2 years, actually. I think of it a little bit longer because if you think about the crash that happened in 2008, 2009, that was like, 12, 13 years ago. And then since then, the general market performed very well. And there was not really much of a tornado as during that time. It was like, it was a perfect breeding ground for growth stock investors. And that gave birth to, Cathy Wood, what's the name of this Indian guy that's Spec King?
Chamath.
Chamath,
Yeah.
right? And I remember even Chamath was comparing himself to Warren Buffett and how he performs against, Berkshire Hathaway. So, and then you have a new people that never really had the pleasure of going through this horrible downturn. So they never really experienced that. And, you take that for 13 years, it's just a natural tendency to get a little cocky, to get a little reckless, and to like kind of increase their risk level because you're not getting punished for it. And it maybe was taken to such extremes that it just had to rebalance. And I think that's what we're going through is this rebalance. I mean, the Fed came in, raised interest rates, pulled the liquidity out, and some of these high flyers started to sell off, and more people started to be like, looking at, what is it that I have in the portfolio? Are these companies are even going to be profitable? I know there's some YouTubers out there that only look at revenue growth and don't pay attention too much. Like, is this company have even gross margins, or do they even have a possibility of being profitable? Because at the end of the day, like, the profits is the goal. If you don't get to profits, eventually you're going to go out of business. But it just went too far, I think. And now for the people that never experienced the 2008, 2009 financial crisis, this is like, hey, this is like their lesson or the reminder of, hey, we should all stay humble, and pay attention to what we own.
Yeah, I think that's well put. If you're getting reinforcement for certain behaviors, you're going to keep doing that behavior, right? You're going to keep making those same decisions. So if there's no punishment, then yeah, you're like, how much can I get away with? What can I get away with? And so you keep step by step by step. And that's exactly what was happening.
Yeah, that's the natural tendency. And you know what, this period of time also, since 2008, 2009, I started a blog in 2009. And so back then it was, financial blogs. There was no YouTube. There was no YouTube financial people. I had a YouTube channel, but I wasn't really talking much. I just had it because I needed a place to store some videos so that they wouldn't take my space away from my website. But this whole period, the YouTube financial thing was born, and when you're right, when you are seeing stocks only go up, always buy the dip, then you have people, influencers, whether YouTube or Twitter, talking about the trending things, right? And then they get also rewarded for that. With views, with subscribers, and with success. And then you get rewarded with great comments and feedback from your viewers. And it's kind of like cocaine, right?
It is.
And then it's like, then it starts crashing down. And it's like everything is like reversing now. Because now, the content is out there and it's like, it keeps punishing you every day, But I mean, I just think it had to happen. But also, I do think it's healthy because we all learn more from pain than we learn from success. And I personally learned twice. I mean, 2008, 2009 financial crisis was kind of like really my beginning. So I went to the fire, I chose the right companies, and it turned out well for me. But then along the way, I got cocky. I thought I was smarter than Warren Buffett, and I decided to be like, hey, let's go and invest in the junior miners. And oh my God.
That went
Oh
really
my
good
God. I mean, I got my ass handed to me in a way that I never thought, I don't even know how I came out of it alive, to be honest with you. But that experience, as hard as it was the best thing that ever happened, because it really made me pay attention to and have very strict rules to what I will look at now. And if I never went through it, I probably would have gotten caught up in this growth thing and everything. So that's my experience.
No. So you mentioned there are certain things that you look at, certain rules that you have. What are those rules? How do you find your early stage investments, and what do they need to have for you to invest and invest with like a more long-term mindset?
So I take the Warren Buffett's approach of what is a good business. I want companies that have good quality revenues. In other words, I prefer recurring revenues versus non-recurring revenues. I want revenues that have high profit margins, 50, 60, 70%. I want there to be some kind of switching costs. Like, when we're talking about we share one investment, which is Voxtur, those revenues are so high quality. And once the clients become a part of their offering, they're not switching. Like, they're not switching for 70 years. Because it's so ingrained in their business operations. And Voxtur's business, has increasing gross profit margins now, or, as the business progresses, they will go towards 70, 80% profit margins. Switching costs are huge. The offering is great. That's what I'm looking for. And I'm also looking for companies that are overlooked, which if they trade on outside of NASDAQ or New York Stock Exchange, they're automatically overlooked. If they trade on TSXV or Canadian Stock Exchange or OTC, they're going to be overlooked because people on those exchanges, what they look for is they want to get high on pot and they're looking for gold. That's what they're looking for. They're looking for stories. They're not looking for good businesses. They're not. So if you look for good businesses on those exchanges, you have no competition. Like if you look for trash, mushrooms, anything, oh yeah, you got lots of competitions there. You're looking for gold, for sure. But no, if you're looking for Voxtur, if you're looking for Secure or former Globex, you're not going to find that because people just don't know what to do with companies with real revenues and real solutions. And also, I'm looking for companies that already have. I want them. Secure is a little bit an exception. I'm going on a tangent there, but really, I'm looking for companies that already have revenues, because I want the proof of concept. I want to be able to call the customers and say, why are you using them? What is it that makes you choose them versus somebody else? I need that. And I know that there's plenty of companies out there that don't have revenues, but they're going to revolutionize your life. They have the next thing. It's really easy to get excited. But I just, that's where I put the limit. Like if you don't have revenues, I'm sorry, but it's a little too early for me. I want the revenues. I want good quality revenues, and I want you to have, a long runway, so that, because I don't want to invest in small companies for them to stay small companies. I want to invest in small companies that have the possibility of getting big enough so that they can go on NASDAQ and New York Stock Exchange, and be discovered and be re-rated. Because
at a very high multiple, at a much higher multiple than on the
venture.
Yeah.
Because like on the venture, you can get companies that are trading at 1x revenues, for example.
Yeah.
And they could be profitable, but they choose to show very little profits because they're reinvesting. But if a company, let's say a company has a 20 million market cap and it has a 20 million revenue level, it's possible to find those. And then by the time they reach 50 million or 100 million of revenue, guess what? They're not going to be trading at 1x revenues anymore. They're going to be trading at 10 times or 20 times revenues, especially if they show profitability. So you get the benefit of the growth from 20 million to 100 million. That's a 5x on revenue, but then you get another 10x on the multiple expansion.
Yeah. I mean, so the company I was telling you about before we started this interview was ESC. So ESC Entertainment, they trade on the venture. They're an esports company in the gaming space. And right now they're trading at between 1.5 and 2 times revenues, which is like ridiculously cheap. And
you're not going to find that on NASDAQ.
No, absolutely not. And
well, maybe now you do.
maybe now after the Selloff, but yeah, when valuations are normal or in a bullish market, no doubt.
Yeah.
And so like that's one of my largest investments, and that is exactly the reason for it. Like I see ESC being on that trajectory that Voxtur is already at, right? So I see them just being a little less further along in the story, but yeah, man, Voxtur, Voxtur is the one large investment that we do share, you and I, and I'm a huge, like I've went through the process and I know how flawed the process is. And I know how valuable Voxtur's solution is to those issues. For you, what excites you the most about Voxtur? Like which business arm or what branch of the business are you most excited about? And like, what do you think has the most potential for Voxtur to become $1 billion company and multi-billion at that?
You see, they have more than one business unit that you can get excited about. I mean, the most recent excitement is about the AOL, which is attorney opinion letter. On April 6th, Fannie Mae approved attorney opinion letter as an alternative to title insurance. So that's super exciting because that alone could be worth $5 to $10 billion once they get some market share. Then RPTA, real property analytics, that's another one of those that can generate $100 million of EBITDA per year, because think about our property taxes. We just pay our property taxes. We don't ask any questions. The bank just pays it on your behalf. They don't ask any questions whether the taxes are too high or too low, and then all these lawsuits are flying around. So now them introducing RPTA to introduce it to both the retail and also to the banks as a check. Hey, are the property taxes okay? I mean, which bank wouldn't want to make sure that it's okay? They're already lined up to sign up for this product. So I think more banks are going to sign up for it, and then individual people, maybe it's not going to be as popular among individual people, but you will get certain people that will buy it because they want to know how their taxes compare to their neighbors. So that business is exciting. And then the appraisal, the A now, that's super exciting too, because I used to be a real estate appraiser. I know that how awful that process is. The entire appraisal process holds up the real estate transaction. I mean, how ridiculous is it for the appraisal to take 4 weeks? It's crazy. And Gary and his team want to deliver appraisals within 72 hours and $200. I mean, that's just, and you know, you mentioned something about disruption. You see, people love that word, disruption. And that's when, if you go on the smaller exchange, every other one is a disruptor of something, right? I mean, he has to be realistic, because most of the time they do disrupt, but they don't disrupt their industry. They disrupt your wallet. And so it's tough. You see, I wasn't interested in Voxtur at first. I found Voxtur because I went through every company on TSX Venture. Like, I don't know, it was 2,000 or 3,000 companies, and I found it, and I'm like, oh, they're going to revolutionize appraising. And I'm thinking, like, right, I've been in appraising. Like, these guys are 60 years old. They learned how to use a computer yesterday. Like, there's no way they're going to sign up for it. But then when COVID happened, that's when I was like, okay, they're going to disrupt it because they have to. And that's how I kind of, so I love disruption. I love it when it actually happens, and you're benefiting from the disruption. I don't like the disruption to my wallet, though.
It's a fair point. I don't think anybody does. Finally, let's talk a little bit about the YouTube scene, a little bit about the financial influencer scene. So you and I are considered, whether we want to be or not, we are considered financial influencers. First of all, how do you feel about that term? And second of all, what are some lessons? Like I shared some lessons. By the way, guys, you guys should check out his channel, because we also did an interview on his channel. I will link that below. We talked about a lot of that, so you guys can check that out. But Mariusz, like, what do you think? What lessons are you going to take from this? From this downturn in the market, and how are you going to apply it to how you create your content on YouTube, and then for your private community, which I know you also run a private community. So what's going to change, or is anything going to change in how you present the content and how you run that business?
You see, my lesson already happened with the miners. Like, I got my ass whooped with the miners. So this really shaped how, I choose my companies. So not that I'm not going through pain. I am going through tremendous pain right now. Not as much as the miners. And I tell people, you go through the mining bootcamp, nothing will touch you. Like, no volatility will hurt you if you go through the mining bootcamp. But so I try to, do very, very thorough due diligence and present the due diligence on my companies. And I try to choose, quality companies that really have quality companies or quality assets that really, I truly believe that have the potential to, to become great. So I feel like if I do this kind of work and then if I fail, then at least I tried. Then at least I did the best I could. So I don't think that my content will change much. It will be just more of the same quality content, and just focus. As you know, I don't talk about a lot of stocks because of some of the things we discussed before. It's impossible to keep track of too many stocks, and if I want to benefit myself, then I will talk about the new electric vehicle, kind of like what Meet Kevin did. Everything that's trading, I'm talking about it. Asimoto, this, write it, smile, it gets you views. But then when the turn happens, you get smoked, And I also have nice saying. Think about what I learned from Warren Buffett is how to have a foundation, like how to have a strong foundation. And then it's up to me what kind of house I want to build on that foundation. I don't have to copy him and choose the investments that he have. But if I have the foundation and build a house on it, then when the storm comes or when the rain comes, I'm still going to get wet. But hopefully I'm not going to get blown out. But if you build your house on sand and then this happens, what's happening right now, you get completely blown out, and there's no coming back from that. So that's kind of like how I view my content, and learning from that lesson in the mining sector. Because remember, I thought I was smarter than Buffett. Like I'm gonna make more money than him because I found junior mining stocks, and oh boy. So now I went back to the basics.
No, that's an important point, because I think, as we discussed in our interview on your channel, it's like, a lot of us, it's easy to get caught up. It's easy to get caught up, whether that's on the YouTube side of things with views and growth, etc., or the like you mentioned before, it's almost like cocaine, right? You're getting messages, you're getting thank yous, you're getting comments like saying, oh, like you changed my life, blah blah blah. But then when you flip the other side of the coin, now it's like, oh, like you ruined my life, oh, like I'm down because of you. It's two extremes, right?
Yeah, I had messages during those bad days. You've set me back financially a decade. Like, oh, definitely doesn't doesn't feel great at all.
So I think it's important for us to really be like that anchor, right? If we're gonna be on here and share our thoughts, share our experiences, share tips and educational content, it's very important for us to be like that strong anchor, and not go from like this extreme to that extreme and talk about a million different things and just do things because they're trending. Like I think it's so important, and like that's how I'm going to create my content moving forward, is like, okay, this is what I'm talking about in this box, right? In this little box, this is what I'm talking about. I'm sticking to that. And, there's no high emotions, low emotions, this, that, like, oh, on a red day, oh no, the crash, do this now, otherwise you're going to lose all your money. Oh, it's green. Oh, everyone's going to be a millionaire tomorrow. Like, no, like that is what's wrong with the space right now. And like, I'm cognizant enough to think like, I want to stay true to my values, do things the right way. And, whether the market is up or down, I can tell myself that, you know what, I did what I could do. I stayed true to myself, and I stayed true to my mission, which is to try and help people's financial lives. So,
and and another thing I would like to point out is that just because a stock price goes up, doesn't mean you're right. And just because the stock price goes down doesn't mean you're wrong, And I'm actually experiencing something with another position, which is Oracle, the disconnect between what's happening on the fundamental level with the property, which they're delivering, progressing forward, and the stock is going completely opposite, and you get that. So if you are correct on the business and on the fundamentals, or correct on an asset or whatever it is, eventually you're going to get rewarded. So I guess people should always keep that in mind. Just focus on that, and it will be okay. If you're wrong, well, then you will lose money and take the responsibility for that. But if you're right, it will reflect the value at some point.
And my final comment on that is, like, especially with early stage investments, you can't say that you won or lost in 6 months or in 3 months.
That's right.
Or in 1 month or even in 12, like 24 plus months, like at minimum, is when you're going to see if, like, you really, depending on what stage they're at, is when you're really going to see like, did I win this investment or did I lose? And that's that.
Yeah, I mean, look at the situation in your own life. Like if you ever ran a business or you try to do something, most of the time it takes a long time to get a client to. I mean, look, even if you go to the gym and you want to lose 5 pounds, you think it's going to happen in 2 hours? It doesn't matter how hard you lift. It's going to take you months, you know? Yeah. Yeah, it takes time. And, people overestimate how much they can get done and how much their investments can do in 1 year, but they underestimate how much can be done in 5 to 10 years.
Great point. Great point. And that's a great way to end this interview. So thank you so much for joining us today, Mariusz. Like I said, you guys can find him on his YouTube channel. I will link it down below. We also did an interview on his channel, and that one is quite interesting as well. So thanks again for joining us, Mariusz. Thank you guys for watching, and see you next time.
Thanks a lot.